Hello, viewers and listeners, and welcome back once again to the Money Mental podcast. As always, we are here with Dr. Andrew Wilson. My name is Chad Williams. I'm from Infinity, and I'm filling in this week. Doc, I'm really looking forward to this one. RBA rate decision. You
Yes.
always have some fantastic data around that. So, how have you
Yep.
been? Looking forward to you taking us through it.
Well, thanks, Chad. And another week in property news. We bring the latest news here on the podcast, and that's the whole reason why people should keep in tune, because whatever's happened over the past week, you'll hear it here first. And of course, yesterday we did have the latest meeting of the Reserve Bank. No surprise, the direction of the bank, but I think the interest was actually even not so much in the statement that's released with the decision, because that's looking a little same old. But I did listen into the press conference that comes afterwards with the governor, and there are a few interesting things there from the press conference. We don't have a transcript of the press conference. I think that'll come through later. Well, let's hope so. But so I had to listen through. But there are a few interesting points, I think, that the governor of the Reserve Bank made. But let's get started, Chad, and we'll talk about it as we look at the slides, if you like.
Looking forward to it, Doc. Always enjoy you unpacking it, especially alongside the commentary. So, please take it away.
Thanks, Chad. Yes, My Housing Market, of course, is my brand. I act as an independent commentator and on the housing market and all its bits and pieces. And we also provide robust and real-time in-house data as well. So we've got the data, we've got the commentary. We put the jigsaw puzzle together to come out with our views of the market, which pretty much tend to be spot on from period to period. And it is all about the current state. So we bring you the podcast every week to tell you what's happened in the property market. So if you're making a decision in regard to property, you will have all the information that is available to you, as well as us discussing just what it all means. So it's not just data points, it's also putting the context and I guess the historical perspective and our experience to let us know what's happening in our housing market. So the week to Wednesday, June the 19th, marching through. We're just about at the end of the financial year. So I hope you've all got your tax or ready to put your tax returns in. Of course, we will be getting some tax cuts to begin the next financial year. So there's some good news, particularly in a high inflation, high interest rate environment. But so what's happened this week? It was all about the RBA decision, of course, with most of the focus. Last week we had the latest labour market information, which of course is important. That's the May labour market information from the ABS, which is important, particularly for interest rates, because it does tell us how the economy is performing on a significant measure. And that relates back to issues with inflation. And of course, that means what's happening with interest rates. We also have, as usual, Chad, the latest weekend auction results. Some really interesting results last weekend. Of course, it was the return from the previous weekend, which was the public holiday for the King's birthday holiday. So interesting to see what's happened there. And it's usually this time of the year we start to see the winter chills set in. Very cold morning this morning in Melbourne. It got down where I am at the moment. It got down to just 1 degree. That's chilly. But frosty.
Yeah, Doc.
Yeah. So, but as I said, we expect to see some easing in market activity, but we really didn't. So some good news there in the auction market. So let's get started. And of course, first, it's the RBA decision. And no surprise, the RBA decided to leave rates on hold again over June. That's the fifth consecutive steady decision by the RBA. Our economy is still strong, despite 13 rate rises since May 2022. So we're over 2 years into this tightening cycle. Really nothing much has happened. Even the lower inflation rate, as in my opinion, was really happening anyway through the post-COVID lockdown adjustments. I'm not sure it had a lot to do with higher interest rates, because demand is still well ahead of supply generally in the economy. And as we'll see, as we saw last week, we have still a very strong labour market. The unemployment rate actually fell back to 4%. Yes, it's not in the realm of the 3% that we've been used to. But as I said, we'll have a look at that, the latest unemployment data. Retail sales are still high. They're still above the pre-COVID levels, significantly above, and they're still above where they were a year ago. So they're still tracking around about that stimulus package level. Of course, those numbers are inflated a little bit because of the surge in migration. So there's more people out there spending, and inflation, of course, because we look at the value of retail sales, has pushed up that value just through inflation. But nonetheless, we're still significantly ahead of where we were prior to the COVID pandemic. As we say, rates are still likely to remain steady, but inflation, which has been rising over recent months, is still a concern. So let's have a look at what the Reserve Bank Governor said. Basically, she said exactly the same what she said last month, which is basically what they said the previous meeting. And the real, sort of crux of all this is that they don't really know the future direction of inflation, therefore interest rates, and that they can't rule anything in or out. But in fact, in the press conference, the governor did say that they are being surprised at the stronger consumption that's coming through. That is, how people are spending, consuming. We've said that retail data is continuing to point to quite a buoyant economy in terms of consumption through retail sales. We've been questioning some of the data the RBA has been using in relation to telling us that consumption was easing. I think they've got to look at some of their measures, of consumption, because they're now sort of backtracking a bit on that. Now, we look at the most significant item in terms of consumption, and that is the housing market. That's your biggest purchase. And that's really been, kicking goals this year so far. As we'll see when we look at the auction results, as we see every weekend, we're seeing record numbers of properties for over this time of the year going under the hammer. That can be sort of a cyclical impact, but nonetheless, people are out there buying homes, and they're buying homes at the highest rate on record for this time of the year. So, that would sort of tell you that people are feeling pretty good if they're prepared to be out there, undertaking what will likely be the biggest purchase of their lives in terms of a house or a unit. So it's been a little bit ponderous why the Reserve Bank be saying, consumption's falling, blah, blah, blah. The other point that the governor mentioned was that, measures of consumer sentiment are very low. And it's like, well, if people are, again, quite happy to be out there charging into the housing market, why? That just doesn't add up if consumer sentiment is low, And again, this is something that I've discussed, that we really can't rely on those surveys of the consumer sentiment because they don't make a lot of sense. And I think what we're seeing in these surveys a lot of the time is that people will say what they think they have to say, not necessarily what they actually believe. They think, well, everybody's sort of, the media's talking doom and gloom, blah, 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 high interest rates, but so we better say, oh, no, things aren't good. And yet we're just going to go out next weekend and buy a new house. You know what I'm saying? And commit ourselves to a 30-year mortgage.
Sorry to interrupt, Doug. Isn't it that a bit counterintuitive?
Yes.
Trying to pull hard data on a subjective topic?
Exactly. And this is the problem with quantitative and qualitative methodologies, that when you do surveys, and this is what we've found through, surveys for elections have been, really out of whack in a lot of instances, because people are saying what they think they're expected to say rather than what they actually believe. So what they do in the ballot box is different to what they actually do or what they actually say in these surveys. And I think it's a bit the same with these sentiment surveys, which just don't add up. When you look at, as you said, the hard data, um, that when we're seeing strong housing market activity, we're still seeing, relatively strong retail sales, and yet we have these very low consumer sentiment numbers. It just doesn't add up. And what concerns me is if, the Reserve Bank is using this, well, questionable at least, methodology as part of its decision making process, and they're conceding, well, how come the surveys are showing everything's doom and gloom, and yet the real world's showing everything's sort of pretty bubbly out there, low unemployment, jobs are surging, unemployment numbers are falling, auction clearance rates, auction sales are at record levels, and we're seeing very strong growth, prices growth in some of the capital city markets, So it just doesn't sort of add up. Now, the other thing the Reserve Bank governor said, which is a bit of a hobby horse of mine, was in regard to forecasts. So the Reserve Bank will be releasing another set of forecasts in August. Now, they're saying now that, well, it's looking a little dodgy, perhaps, their latest forecast. Of course, the US does this, so maybe it's just copycat stuff for the US Feds. It does a forecast process, and it's been way off the mark in terms of its dot point forecasts. It was forecasting 4 or 5 interest rate cuts this year, and I think it's now becoming questionable whether there'll be any. And my point is why, and the Reserve Bank governor said, yeah, well, this is the problem, forecasts, we've got to understand they're just a forecast, Well, yeah, but people make decisions based on these forecasts. And this is supposed to be the highest level of economic insights that we have. And yet they keep getting it wrong. And then they say, well, it's just a forecast. You can expect that. Well, why produce a forecast if you're conceding that it's unreliable? Why do that when it can influence economic activity? And it adds to, all the white noise floating around regarding the economy. So she said that, and she said, well, they're getting another lot out in August, but, it's sort of like, well, why bother with your forecasts if you're conceding that they're unreliable? And this is the same in the US. That got the dogs barking there when they were forecasting 4 or 5 cuts this year, the Federal Reserve, and of course they're now busily scraping the egg off their face, but they say the same thing. Oh, well, it's just a forecast. Well, why do the forecast if they're consistently unreliable? So anyway, that's a question for.
Sorry to interrupt again, but it's not the first time that you've raised this point. You had raised concerns about the forecast back in January after last year's saw forecasts of a rate cut in the fourth quarter. We're still seeing the same issue. Is the RBA and the commentary that they're producing, is it not learning from the past?
Well, I think that there's a little bit of nervousness in the RBA because of what happened to the previous board. We have a whole different environment now for the RBA. They report 8 times a year, not the old 11 times a year. They have to do the press conference. There's been a lot of errors in terms of what the forecasts were from the previous Reserve Bank, which, at the end of the day, may I say, was probably looked very shabby in terms of its, reputation. And as I said, it's changed now. The government's changed it, but I do think a lot of this is about that the economic dogma that they rely on, and the lack of flexibility in terms of looking at the economy and what's driving it. As we've said relentlessly here on the podcast, there is a clear relationship between changes in inflation and the price of oil. Just track both of them. This isn't like rocket science, let me tell you. But our inflation rate has picked up over the last 3 months because the price of oil has started to track higher than where it was a year ago. Interest rates were raised last November by the Reserve Bank, and we saw the same scenario because there was a breakout in the price of oil over the couple of months before then. Now, we're still tracking now higher than where we were a year ago in terms of the price of oil. So if this continues, and we can tell that, the price of oil over May was 8% higher than where it was over May last year. So we know that's a fact, and we still haven't had the May inflation data, monthly inflation data. That comes out next Wednesday, and we'll have that on the show next Wednesday. But
That'll be a
given that
scary one.
given the relationship between oil and the inflation rate, Chad, we're likely to see yet another increase in inflation. Now, I'm making a forecast, but I'm basing it on sort of a rational relationship here. So we'll see. I'm not a magician, but I'm saying, well, it looks like there's a clear relationship in the price of oil and inflation, not just our inflation, but the US inflation as well. So we're seeing this still inflation tracking or oil tracking higher, significantly higher than where it was a year ago. So that's likely to work its way into a higher inflation rate, all other things being equal. And the other strong contributor to the inflation rate, of course, is housing. And we're seeing no relief from higher rents. In fact, that's a lagging environment as well. And that's sure to again be a significant contributor. So we'll see next week. But as I said, I think it's not, I don't think the Reserve Bank should be telling us, the forecast is just a forecast, don't take it seriously, blah, blah. Why do it? And as I said, I don't think it adds to the credibility that of those that are doing the economic analysis for the Reserve Bank by saying, here's our latest forecast, but, take it with a grain of salt. If that's the case, don't do the forecasts. So the other thing the Reserve Bank governor was saying, and I know I've gone on and on and on here, but I think it's important, is that they will be relying on the June quarter inflation data. Now, you've got to remember, Chad, we've only just begun this new monthly inflation rate environment, which was badly needed because we and New Zealand are the only ones with the quarterly official inflation data. The US, the Eurozone, the UK, they all use a monthly inflation rate measure. Now, we've got a monthly one now, but the Reserve Bank governor was saying, but it's the quarterly one we're going to look at, which doesn't come out for, the best part of 2 months, certainly 6 weeks. And then that's going to be like, the big thing. And yet the quarterly rate will be telling us what's happened for June over April, May, June. April is a long, long, long way back, and yet we're looking at data to determine official rates now that is 3 months old, which will be 4 months old by the time we get the results. And I'm thinking, this again is creating a problem because things would have moved on by then. And as I said, we are going to see, with the relationship with the price of oil this year to last year, we're definitely going to see higher inflation through higher fuel costs and probably likely house costs. But the Reserve Bank governor's going to have to act on that, because she said, we're waiting for this June quarter data. There's a lot of questions here, and we'll see how it pans out. But, we want to keep our fingers crossed that the price of oil, which I don't like to say is now tracking above $80 US a barrel, which is not the right direction to go. And this is the third week in June. That price of oil really needs to be heading back under 70 for us to have some relief, not just at the bowser, but at in inflation and hopefully interest rates. So I'm still a little nervous that, we may have another interest rate increase here somewhere down the track. We've really got to keep our fingers crossed to some degree. And I'm just using the data as it influences inflation as my measure. So we'll wait and see, but certainly on hold again, nothing much new there from the Reserve Bank governor in terms of the statement, other than say they're not ruling anything in or out, which means, expect the unexpected or expect the expected to please yourself, going forward. And that's our chart there, which shows the direction of interest rates, official rates. We're still lower than where we were, Chat, back in September October 2011. So yes, they're high interest rates, I guess, because we've come from zero. Of course, they're going to be high,
Hmm.
but they're not higher than where we were back during that mining boom period in the end of 2011. So and maybe that's part of the reason why we've still got a robust economy. I got a bit ahead of myself, but I mentioned the labour market was still strong. The latest figures came out for May. Again, not good news here if you're looking for lower inflation and lower interest rates. The jobless rate fell. Where's all this activity that's declining because of high interest rates that some commentators keep blathering on about, which is bewildering. We've now got the unemployment rate falling 4%. Yes, it's higher than at its lowest point last year, but this is still a very, very low number. It's certainly a full economy, or sorry, a full employment number still, down
Hmm.
from 4.1%. We had an increase, and this data is a little volatile. The ABS has been telling us, yeah, okay, well, we've had a few issues with our data, changes to the seasonal adjustment model because things were different in COVID. Strong months were weak months were strong months. So we've got to get through that post-lockdown period to get our seasonal adjustment models, more robust and reliable. But we had 40,000 jobs created over May, and that followed a 38,000 rise over April. So plenty of jobs being created. Yes, migration is helping that, of course, but the unemployment rate fell with all those extra jobs coming in. Unemployed actually fell by 9,000, which followed a 30,000 rise the previous month. Again, this is very volatile, these numbers. It's sort of like, well,
Yeah.
you're down by 9 the previous month, you're up by 30,000. It's like, Anyway, the participation rate was steady. That's still a very high number. This is the proportion of the potential workforce that's actually working. So we have a very high proportion of our potential workers that are actually working. No surprise, Western Australia and New South Wales remain the lowest states for jobless. And that jobless is still low despite hundreds of thousands of new workers coming in through migration and higher interest rates. And they keep saying, oh, it's a lagged effect. How long does this lagged effect happen? It's 2 years since we started, increasing interest rates. Where's the lagged effect? It's just it's just a slogan to many who just can't explain how they get it wrong. And it's all part of the economic dogma that a lot of analysts rely on, and which
Hmm.
they get wrong because they're relying on the dogma, and they're now saying, oh, well, it's a lagged effect. So it hasn't happened. It's the old story. It hasn't happened this month, but you wait till next month. And then it's like, oh, it didn't happen next month. Oh, it's the lagged effect, anyway. So let's have a look at the unemployment cycle there. Certainly increased over the past year, but higher than but still very low, in terms of the historical perspective. Um, we really have to go back to the raging economy we had during the mining boom of 2007, 2008, which is one of the strongest economic periods in our history, to have these sort of numbers, So it's a very, very strong result. Still at 4%. As I mentioned, New South Wales and Western Australia with the lowest unemployment rates, still with the threes, but you can see there that every state except Western Australia is tracking higher than where they were a year ago. So yes, we've eased. Perhaps a lot of that's to do with all the extra migration, but still very low numbers. And even Victoria, which is the outlier with the highest of the major states' unemployment rates, I wouldn't be sneezing or quibbling about a 4.4% unemployment rate. That's still a pretty good result, and it still means that there's plenty of work available and plenty of competition for workers in Victoria as well. So we're going to finish off with our usual latest weekend auction results, but just back on the unemployment data, there's nothing there at all to show that demand is weakening in our economy in terms of people having jobs, in terms of people having, and this again doesn't make sense with those measures of consumer sentiment, with a very low unemployment rate. why would you be feeling crappy about about things with a full employment economy? So as I mentioned, Chad, the weekend auction results saw us returning uh, from the long weekend, um, and there's really no sign of a winter slowdown, and we usually start to see that emerging now. The weekend after the King's birthday holiday weekend that's when we start to track downwards, because people are we're moving into the winter market. The autumn market has just run out of puff, as it usually does. So it's a seasonal effect, and then the market starts to pick up early in August, and July is a pause month in the housing market. But we didn't see any signs at the weekend. Again, we had more positive results for sellers generally, with reasonable clearance rates, and the RBA decision to keep rates on hold, no surprises there. Of course, will keep consumers, focused on the real sort of scenarios in the housing market, which is about their incomes and prices, etc. So let's have a look at the results. 805 auctions in Sydney. This is after the holiday weekend, of course. Clearance rate, not too bad, 70.8%, a little bit lower than the holiday weekend before, still above 70%. But compared to a year ago there, Chad, we have another big difference in the number of auctions, that, compared to the same weekend last year. Nearly twice as many auctions. Well, certainly 75% more auctions compared to the same weekend last year. Clearance rates down, but this was the highest clearance rate for the year last year. That 81.9% was a boom time result. Of course, buyers were storming housing markets a year ago because they wanted to take advantage of lower prices. Now we're seeing sellers storming the market because they want to take advantage of restored confidence. But 805 auctions in Sydney, 70.8% clearance rate, and well ahead of the auctions we conducted at the same time last year. But clearance rates were higher. But we're going to look at the actual sales, which will give a measure of the difference between listing changes and clearance rates over the year. So Melbourne, similarly, 1,003 auctions, big weekend of auctions. Not a bad result for Melbourne. It's been tracking in the mid-60s for a while now. Still, you could still describe that as a seller's result, seller's market, with nearly 7 out of 10 properties selling under the hammer on the weekend. Again, significantly higher than the same weekend last year, the same post-holiday weekend last year, 622 versus 1,003. And the auction clearance rate, a similar difference between Melbourne and Sydney this year compared to last year. Brisbane, big weekend of auctions, even though they didn't have a holiday the previous weekend. And again, a good solid result for Brisbane. We know anything over 50%, because Brisbane has a different auction culture, is a good result for Brisbane. And again, its clearance rates are lower than where they were a year ago, which was a real boom market in Brisbane. But its listings also, like all the other capitals, well ahead of where they were a year ago the same weekend. Adelaide bouncing back, similar clearance rates. Again, listings higher than the same weekend last year, and the clearance rate about the same. Canberra's still tracking as the strongest auction market in the country. And here we go with Canberra. Hello, are you back? There's Canberra. We've seen 2 in a row now above 60%. Haven't seen that for quite a while in Canberra. Big numbers of auctions, and that clearance rate now working in reverse to the other capitals, well ahead of where it was a year ago, even though listings are well ahead. So we've been talking about this, Chad, that we've been seeing sort of early signs of Canberra maybe picking up. We've been saying it's a good value market, that Canberra market. It usually tracks what's happened with Sydney, but it disengaged from that Sydney market over the latter part of last year. Maybe there's some issues with the changes to the tax regime there, not sure. But nonetheless, I guess buyers are starting to think, hey, look, there's some good value in that Canberra market, and they're coming back. Now, we're not going to call a revival yet, but certainly the data is looking positive and in line with what we said maybe might happen. So those early signs are starting to consolidate for Canberra. It's just a question whether they'll hold over the next couple of weeks. But, as I said, um, it is the winter market coming up. So in a way, we sort of pause until August in terms of the sort of the real market. But what I'm saying overall is that we're just not seeing any signs of a winter slowdown with these numbers from last weekend. They're very strong and they're very consistent. And this is the weekends where we really start to see the market saying, okay, well, that's the end of the autumn selling season. Let's have our winter break and wait for the spring season to start, which is notionally is in August. So let's have a look at the trends. Sydney continuing to track above 70%, pretty consistent market there in Sydney. Melbourne's picked up a little bit so far over June compared to May, but it's a mid-60s market and certainly below where it was a year ago. All markets are, because as I said, that's when when buyers were in the market in droves or coming back into the market, not so much sellers, and sellers are now back in the market in big numbers. So Brisbane holding at its usual mid-50s results. We know there's still a strong market in Brisbane with prices rising, but below where it was a year ago, which was just a record market for auction activity in Brisbane, and it just reflected that migration surge that's driven Brisbane over the last couple of years. Adelaide, a little bit lower than those 80% it was getting last year, but still a good result there. A very strong market, Australia's strongest auction market. And Canberra, see what I'm saying? Hey, is Canberra back? 63%, just picked up, and now looking a little bit like where it was a year ago. So it's just a question of whether that Canberra market can consolidate those recent gains. If you're looking for those auction clearance rates, they're available on my LinkedIn site, Doc Andrew Wilson, every Saturday night at around about 6:30, and you can get the full national report Sundays, which includes the regional breakdowns for Melbourne and Sydney, and the top 10 sales under the hammer for each of the capital cities on the Saturday. As I mentioned, when we put those listings and clearance rates together, which gives us the number of sales, let's have a look at the number of properties that have sold under the hammer so far this year compared to the same period last year. Have a look at this. So we're 30% higher in terms of number of auctions, weekend auction sales in Sydney, 12% higher in Melbourne, 13% higher, 21% higher in Melbourne, 13% higher in Brisbane, 12% higher in Adelaide, and now Canberra is 1.1% higher so far this year compared to the same period last year. So, hey, maybe we were right about Canberra going forward. But this puts it into perspective. These are record numbers of properties selling under the hammer over the first 6 months of the year. It is all about that surge in listings, even though clearance rates are a little bit lower, right? The number of properties that are actually turning over is at record levels. So a very strong market. And again, we get back to our conversation regarding the Reserve Bank, really, and those measures of consumer sentiment. Gee whiz, that's very strong numbers for a result from consumer sentiment surveys that says it's very bad. Like, would you be buying, or would you see this, rate of purchase happening in auction markets if we had a consumer model that was, if consumers were lacking confidence? I don't think so. It doesn't make sense. So if you want a copy of the latest weekend auction market report, there's a QR code. Take a picture of that. It will give you the latest weekend auction report, which, as I said, has those Melbourne and Sydney regional breakdowns and the top 10 sales under the hammer. And as we always finish off with, Chad, get a hold of that My Housing Market Infinity app. There's a link to that. It gives you a breakdown of all the data for all the suburbs in Australia in real time, updated daily. You're going to have to get a password for that, and that comes from Infinity. So get onto Infinity, and they'll give you the password, or they'll tell you how to get the password. This is a screenshot of the app. It's a great little thing here. You can pick any suburb in Australia that has data, and these are asking prices and asking rents. So it tells you what the market's asking at the moment, not just the median price, but also the high and the low price and the number of listings. And you can filter it there for capital cities or regions, prices or rents. We've looked at Blacktown here. You can filter for house, unit or townhouse, and also the number of beds. So it's a great little toolkit for those in the market or just want to know what's happening generally on a suburb by suburb basis. So get a hold of that one. Same screenshot there for rents for Blacktown, and you can see there the median rent, high rent and low rent. Next week, we're going to have a look at the May inflation data. That'll be very interesting. That'll be hot off the press because that comes out at around about 11:30 on Wednesday. So we'll have that to look at. We've had a big discussion about that today already. Latest migration data, very interesting, which was released last week. We'll also have a quick look at house building costs, which we haven't looked at this month. Some better news there if you're building a house because we're continuing to see a decline. But we'll look at the actual results for house building costs over May and the latest weekend auction results as usual. So this is the report. You take a picture of that, you get the whole report there as a PDF file. It's been great being back here again, Chad. I think we've had a big show today, lots of interesting news. I hope we put some context into those RBA decisions, something to think about. And of course, still a very strong economy, low unemployment rate, lagged effect. Gee whiz, what sort of a lag is this? And still a very vibrant auction market, considering we're into winter. And by geez, did I feel winter this morning with 1 degree when I woke up in Melbourne. Woo, but it's okay. Got the big coat, got the beanie, got the gloves, so we're all good here. So good to chat again, Chet, and we'll talk again next week.
Wonderful. I'm looking forward to it, Doc. It certainly looks like next week is going to be a big one. So for everyone that is listening and watching, please do tune in for that one. As always, Doc brings out the data first. It will be hot off the presses, and I think that is going to be an incredible episode. Doc, thank you.
Thanks, Chad. Catch you later.
See you soon, Doc. Bye-bye.